I'd like to welcome you to the Smart Monday Partnership Update, and I would also like to welcome our Aon clients. We hope that you find this session useful and informative. Before we get into the details, I do need to remind you that everything we're discussing today is general in nature. It hasn't been tailored to you or to your organisation. At the end, we will provide you with some contact details, so please feel free to take note of any questions and get in touch. Before we get started, I would like to acknowledge the traditional owners of the land in which we work, the Gadigal people and the Wurundjeri people. I'm Janine Robertson, and I would like to welcome my colleagues today, Saffron Sweeney and Rashan Singapoli. Saffron is the lead of our actuarial practice and has over 27 years experience. She brings a variety of technical knowledge to us today. Thank you, Saffron.
Hi, Janine.
And Rashan is the head of our Smart Partner team, our relationship managers within the Smart Monday superannuation business. Rashan, hello.
Hi, Janine.
Today, our presentation has three key areas to cover: the new Your Future, Your Super legislation, the recent federal budget update, and also some Smart Monday updates. Most importantly, we do want you to feel informed about the impacts on your business and to understand any action that you need to take. So starting with Your Future, Your Super. The final details have not yet been passed through Parliament, yet we do have an intended start date for this legislation of the 1st of July. Saffron, do you think that the legislation is going to go ahead?
It's very hard to predict that, Janine. There's been a lot of discussion in the media and there's been some pushback from various people. There have been over 150 different people who've put in submissions to the government on this particular piece of legislation. There are some draft regulations, and as you may know, they have gone through the lower house. But the timing is now really tight, and we are watching this closely. We know that the regulations didn't have the detail that many employers will need to practically apply this legislation, and we are waiting to see more documentation on this. Once there is more detail, we will provide confirmation to our employers via our partners, just so that you can get this through.
So, Rosh, with that in mind, how are the Smart Partner team able to assist our employers?
Yeah, thanks, Janine. So the change of the stapling introduces to the superannuation industry is really going to affect our employers and yourselves much more than it will necessarily the members or the employees of your plan. Really, what this is going to be a change to your process. Right now, you probably have a fabulous onboarding process, which includes a contract and some piece of superannuation information in there relating to possibly a default plan, or if it's with Smart Monday, some of our plan's benefits for your staff. Well, now those individuals who are using this process will have to really consider those actual options they have and tell you if they want to be a part of your default provider. If not, there'll be an additional step for your payroll or human resources agent to go away and actually search out this individual super fund. That extra step can get a little bit more complicated. So really how it affects you is really going to be dependent on that process. And a lot of employers from all large, medium, and small enterprise have very different nuanced processes around that. We and our smart partners have a deep understanding of these from a HR point of view, as well as a legislative obligation point of view. So really here it starts as a conversation. Having a look at your processes, but then engaging your smart partner or account manager and talking to them about, well, what does this process look like? What does stapling mean for that process, and how can you best adopt some of those actual additional processes now to minimize the effect later on when the obligation becomes a part of your day-to-day life?
Thanks, Rosh. So the legislation really has been broken down into three parts. Stapling, as Rosh mentioned, is really about bringing individuals towards only holding one superannuation account. The second part of the legislation sits around performance and providing some comparison tools for members that they will be able to access via the ATO. The third part of the legislation is about reporting and transparency of member outcomes. But as we noted, this has not been finalised through Parliament yet. Some changes that will take effect on July 1st have been finalised. And Saffron, would you be able to take us through some of those changes, please?
Certainly, Janine. Many of you are aware that there was talk that the super guarantee increase, which had been legislated to go to 10% from 1 July 2021, may have been stalled, particularly because of COVID and its impacts on the economy. However, the budget did not mention the super guarantee increase, and therefore it will be going ahead as legislated to 10%. We think this is a good thing, as superannuation needs to be built up over many years so that people can retire in a comfortable lifestyle in retirement. And I also note that at the moment, the legislation will have it going up at 0.5% per annum from now until 12% from 1 July 2025. The other changes that have been implemented are an increase to the maximum contributions base for super guarantee to 23,568 per quarter. Please note that the maximum contributions base is a quarterly amount and your super guarantee obligation is based on quarters. The concessional contributions cap is going up for the first time since it was implemented to 27,500, and of course the non-concessional cap goes also up to 110,000. For people who are on an account-based pension and have a drawdown, there was an allowance because of COVID-19 to reduce the minimum amount that must be removed, otherwise it's not classed as a pension, by 50%. And this is continuing into 21-22 because there's still some repercussions of COVID on people who are in their retirement phase. We do note that we've already had some conversations with clients around their super obligations, and particularly where there's some complexity with the rise to 10% or even the change in the maximum annual super guarantee contributions base. We also note that there's been a number of our employers who have been questioning what's included in ordinary time earnings for the super guarantee. If you have any questions regarding these things and would like to have a discussion with us, please get in contact and we'll help you work through those questions. Rosh, is there anything else that employers need to be aware of with these changes?
Thanks, Afron. There are a couple things. Now, when it comes to super, the sky really is the limit, but when it comes to superannuation legislation, the contribution limits and the statutory limits are the limits. So being aware of that is really, really important. For yourselves as employers, clearly the government is signalling that super guarantee is going to be an ever-escalating statutory payment. Right now it's 10%, possibly as high as 12% in the future. That's still a ways to go, but it does mean that your obligation is going to be changing over those years, and having that deep understanding of that obligation and how you can use that to really try to encourage employees to see their super as a benefit, and also their salary and all the associated parts of their salary as a benefit is really critical. Next to that as well is there's individual impacts. Each one of your employees will have new contribution limits. That means some of their plans that they may have spoken with their financial advisor or even their partner, spouse, or family at home could change as a result of these limits changing. And that can have a really, really meaningful effect on their life and in their future. So making sure people are educated is really important as well. Stapling's coming in, meaning your obligation will, or stapling may be coming in, meaning your obligation will be to find people's super. One of the risks of that is that individuals may become more disengaged with their super because they don't have to tell you where it needs to go. So what's really important is each person becomes educated around this change, what it means for them, and employers can be this hugely valuable mechanism to allow and facilitate this level of education simply by engaging with your fund. Smart Monday has a comprehensive database full of modules designed to educate people on what their options are around superannuation in terms of their entitlement, their legislative limits, etc. And those things are simple and powerful tools to make sure that your staff and your people are doing everything they can today to take care of their weekend into the future. That's really the Smart Monday way. So what I'd say to every one of you here today is, when you're considering these changes, educating your people may be something to put into your timeline of activities and events, and they can be done through these digital mechanisms like WebEx, simply by engaging with us and letting us know what works best for you.
Thanks, Rosh. That's a fantastic opportunity. So moving on to the second part of our presentation, the federal budget recently released covered lots of different parts of our economy. We will touch on some of them today, but we will also just focus on the areas that really do impact superannuation. So, women were mentioned a lot with the recent federal budget, and there certainly were some great steps forward. But I can confirm that there were no targeted updates to close the superannuation gap for women. The median gap for women stands at around 22%, so we do believe that there is more work to be done in that area. One of the other pieces of legislation that has come out around low income earners could take some steps forward in that area, and that was the removal of the $450 threshold for the superannuation guarantee. Saffron, can you provide some more information on how that will apply?
Yes, there's been a lot of talk. One of the proposals of the Senate committee that was into looking into women's superannuation benefits a few years ago actually suggested this, and it's been some time in the making. But the government has proposed, and it hasn't yet been legislated, that the thresholds will be removed, and everyone who earns income without a minimum amount will be getting super guarantee contributions from 1 July 2022. I note that the under 18s are still will still not be required to have a contribution made for them, but the system will make a very big change for employers with a high casual workforce. And I note that is evidence that about 63% of women have been earning less than $450 a month. So this will impact women, but not in a generally focused sense.
Hmm.
The impact on employers who have lots of casuals will be something to be considered, and that might be including hospitality workers where local cafes are involved, or even supermarkets. And I note that there has been some discussion with our employers already as to the best approach to handle this. And if you have a large casual workforce, we can actually have a discussion with you as to how that might work best in your current structure. And our reward team is also very well versed in being able to support employers in this type of conversation. So if you think you'd like some extra assistance, please reach out to us. We can help you. We've noted there is a continuation of the lower middle income tax office offset as well. So there's something there for people who are on lower incomes to try and improve their superannuation.
Okay, so another focus area for the budget was home ownership. With regards to superannuation, the First Home Super Saver scheme did receive a small change. Saffron, could you explain that one too?
Yes, the proposal is that the amount that you can put into super and then draw out for your first home will increase from 30,000 to 50,000. So what I think employers are going to see is a potential change to the number of people who want to make voluntary contributions or the amount of their voluntary contributions. This can be done on a pre-tax or post-tax basis, and it's sort of set aside within the super fund to then be used for a first home. There are a few other items that were proposed with regards to home ownership. Um, Single people being able to have better access to homes with a home loan guarantee, and also people who are wanting a home and have a small deposit will be able to have access. Those aren't being done through superannuation, but it's just worth noting because it may make a difference to your employees' financial well-being if they have opportunity to get into the housing market, especially in our major capital cities. There is more information on the ATO website, and we have there a link to the page on the ATO web.
Thanks, Saffron. So, another area of focus was older Australians. They were impacted with quite a significant part of the budget. But, Rosh, can you give us an understanding of how these changes will impact our employers with regards to superannuation?
Absolutely. So a lot of those changes that are occurring now in legislation impact the full week of employees. So your younger individuals from the uh, home ownership perspective that Saffron just covered, all the way to the $450 additional allowance for casual workers who may be just starting out in their first job. There's a range of impacts. Older Australians haven't been left out here, or those for what we call on the weekend of their working week. they've been included here through these two changes. The first one, the downsizer contribution. What this is, it doesn't mean anything specific for you as an employer in terms of what you have to do today, but what it does mean is for your older workforce who may be considering their retirement plans and looking at their balances really in context to what they want for their retirement lifestyle, they might find that there's a gap there between their current financing levels and what they'd like to be able to achieve. The downsizer contribution is a mechanism that they may be able to utilize. Taking the right amount of advice clearly and ensuring it's appropriate for them, this may be a great way to shore up that gap. So, as an employer, if you're looking at engaging those people in the latter part of their working life who are having those kinds of relevant conversations around their weekend and their retirement, it's a great time to engage with that workforce and utilize us at Smart Monday as a way to educate these individuals or talk to them about what the transition to retirement may look like. Secondly, in that same cohort, you have the work test. What this does, it takes away the burden of administration for those of us who are in the later part of our working life who want to continue to work and continue to fund superannuation. There's no longer going to be a burden around having to validate that you're working a certain amount of hours. For you as an employer, this takes away that, possibly any burden you may have around contracts for those older workforces, meaning you have to maintain a certain minimum of hours for them to meet this eligibility. And it also means those individuals no longer have to complete an additional piece of paperwork. And we all love not having more paperwork to do, especially when it comes to superannuation. But these are really, really great little things to really consider. Again, just making sure everyone knows what their obligations are and what their future could look like today.
Thanks, Rosh. Well, this part of the presentation doesn't have any paperwork either. We would just like to give you an update on Smart Monday, but we think it's important to start with some more general information around investment returns. Saffron, can you give us an update on what's been happening in the market?
Yes, before Rosh gives us some Smart Monday returns, I'll have a quick go at looking at this graph and what's been happening in share markets over the last 18 months. As you will all be aware, there was a major impact to the markets because of COVID-19, and we saw a very big dip in the returns in March 2020 from quite high returns back in late 2019. And what we then saw is a complete rebound. It's faster than people had expected it, and the market is now back to a higher return than we had back in early 2020. One of the things to really note here is that there were a lot of people who panicked, and there is some evidence that some employees, members of super funds, moved their money from a more growth style investment to a cash-based investment, and then didn't necessarily get back in quickly and have made a major loss with their superannuation. Those who stayed there and rode the wave of the investment markets actually have now come out of it in a better position than they were at the start of it. So it's very important to look at long-term investing for superannuation and know that there are fluctuations over the years, and that super is something that can come back, but I do note that past is not always a good predictor of the future. However, that being said, it is also important to not just think of shares as risky and think that cash is not risky. If you had actually cashed up and got out of shares and not got back in, you would have returned a very low return, and the people who stayed in shares actually have gained back that 13.2% by the end. So it's really important, as Rosh was saying before, for education. We think employers, but also the employees and members of our super funds really need to understand what risk is and the long-term nature of superannuation and make their financial decisions accordingly. And of course, it's really important for them to obtain some financial advice if they're making any changes or decisions regarding their superannuation. So Rosh, can you take us through the Smart Monday returns?
Yeah, absolutely, Saffron. So I guess what we're looking at now, with the context of what Saffron's just covered, for us who've been in the superannuation industry for a while, we've had the global financial crisis, which was a once in a lifetime event, and now we've had the COVID crash, which is another once in a lifetime event. So we're batting 2 for 2 for the moment. What this means is putting in context this type of performance. After that significant period of volatility, I'm very pleased to show that we've had very, very strong performance across all of our age cohorts, as you can see here. What this demonstrates is that recovery that Saffron just talked about, which is after a deal period of volatility, has been indicated to be a certain amount of market recovery, which has been represented by this performance. But these options, this is not where most of our members are. Most of Smart Monday's members are invested in our My Super option, which is a life cycle option. What that really means is that their exposure to those volatile earnings areas like shares, etc., will moderate itself through their days of the week towards their retirement. The earlier they are in the day of the week, in their 20s and 30s, they are more exposed to that growth, as can be seen by here. Here we see our My Super performance. Our younger cohorts in the earlier part of their working life, 35-year-old returns, are above 20% here. Against the far right, you can see the super ratings market medium. To give you a bit of a comparison, what does this stack up to? A balanced option with about a 70% growth exposure. Clearly, the performance is very strong. If we're getting close to that market medium in terms of growth exposure, where we're looking at a 50-year-old return at Smart Monday, again, we can see we're outperforming those super ratings mediums across those different investment horizons. I don't encourage people to look at one-year returns. Superannuation, we're looking at 30, 40 years in the investment market, so one-year returns are maybe not the best indicator, but clearly a large green bar like that we need to address on the slide. Further down, though, I'm pleased to see that the 5-year returns are also clearly just as strong. Later on in the stages where we talked about the weekend of our life or our retirement for our older age cohort membership, they're still getting that increased performance because they still have a 40% growth exposure. So that's never kind of gone completely, even through this life cycle performance, because it means that even through those volatile periods, those older groups can still benefit from that market recovery, but with context to a smaller portion of their account. So again, I would say here, volatility is a critical thing to understand, particularly while we keep going through these once in a lifetime events, but more so to put it into context in terms of what it really means when you're talking about a 30-year investment. What does volatility mean for you, depending on which day of the week you might be in, so you can make sure you're making the right decisions to avoid that opportunity loss that Saffron just mentioned before. Those are really, really critical and powerful things that compound a person's outcome towards that weekend that they're really, really seeking.
Thanks, Rosh. So, with all things Smart Monday, we really do encourage our members and our employers to take action. With regards to your future, your super, Rosh mentioned that it would be really important at this time to ensure that you have a really robust process in place for your new employee onboarding. I would also encourage you to connect with your smart partner with regards to your future, your super, and we will, of course, be in touch as that legislation is updated. With regards to the federal budget, I just want to reassure you that help is available. As Saffron mentioned, both our actuarial practice and our reward practice would be able to talk to you in context of the Superannuation Guarantee increases and the $450 rule changes. Once again, if you're a Smart Monday customer, please contact your smart partner and we can help with some of those education pieces around that as well. If you do have any questions, our contact details are on the right-hand side of the slide, or please do be in touch with your regular Aon or Smart Monday contact. Thank you once again for being here today.